Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow's daily quick stock market analysis show, where we understand from the charts what exactly happened in the market during the day and then plan for a better trade for the upcoming trading day. That's March 14, Thursday, tomorrow, 2024. Yeah, the day belonged to the bears. It was in this intensified sell-off that happened in the market, while it seems like market is consolidating basically, at least from the Bollinger Band's perspective. Let's we have the quick macro wrap up here. If you want to take a screenshot or try to understand, you can do that, but we would first look at the charts. So this is the Nifty daily charts that you're seeing here. Look at the candlesticks. It's wide range bearish. It is engulfing the previous candle almost. So it's wide range bearish candle. It lost the 20 exponential moving average as well, but the higher low pattern is still not reached, but very close to reaching that. Nifty has lost 338 points today. That means at 22,450, it fell as low as 21,900. That's nearly more than 500 points lost, right? There's a big sharp fall that has happened on Nifty. While Banknifty, it also has formed a wide range bearish candle and it's inside the previous candles. Big size also, if you consider it, is inside that. It is not closed below the previous candle's low. It has managed to close above the 20 exponential moving average and hasn't lost much, only slightly more than 0.5%. That's 300 points only lost. Well, Bank Nifty had an expiry day today. HDFC Bank was doing good. All that reason, but Bank Nifty also had the fourth day of red candle, while Nifty also had 4 days, and this is the fourth day of retracement for the fall, nearly 3% on Nifty, and probably same 3% on the Bank Nifty as well. So Bank Nifty seems to be in better shape, but Nifty has fallen very, very sharply. It has come out of that consolidation range also, and it has reached the 20 exponential moving average. So if you look at where the price is, it's well within the trend line channel. Looks like now it's heading to the bottom of that. Having lost 20 exponential moving average. Bank Nifty was struggling the yellow trend line channel below and climbed the blue trend line channel that you hear, and was attempting to go up with more space left behind towards the all-time high. It went as close as 500 points close to all-time high, but then came the retracement for the last 4 days. That's what is happening, and it has once again breached the neckline of the W pattern that we are all talking about. It had earlier lost that once and then came back, and once again it seems to. So the higher high, higher low pattern is still intact, and 20 exponential moving average also is intact. Bank Nifty did not correct more than little more than 0.5%. Let's come on the Nifty that lost 1.5%, right? It's twice that of, it's more than twice, it's thrice that of the bank of what the Nifty had lost. So that's where it is, right? So very sharp fall. And remember, the day before yesterday we had an all-time high at 22,536, and now you have lost 500 points just like that in a day, in a couple of days, right? So, now the levels, how do you analyze the levels? Is the first major thing is to take out this all-time high once again. There could be resistance there at 22,500, and after that the way up towards the 22,850 zone on the channel top, or all resistances on charted zones. And downside, the first support now, since it has breached the 20 exponential moving average at 22,150, the first hurdle, first resistance before the 22,500, the all-time high levels, would be to take out this 22,000. It's a big rounding number, right? So it is very close to that. It is just 3 points away from that. So it has to have a stable close above the 22,000 first. Then it has to take out the all-time high of 22,525. No, so downside, the first support now the 20 exponential moving average is breached will come in at 21,817. Then the Fibonacci retracement of 23.6 will come in at 21,630. Then comes the 21,230, which is the 100 exponential moving average. Very close by at 21,150 zones. You have a gap also, window gap that can act as support. While on the Banknifty, the first resistance would be to retain and close properly above the 46,000. It's very close by that. When they're close below that, it is hardly 20 points away from the big rounding number 47,000 in Banknifty. So clearing that is the first thing, and if that is cleared, then comes the 47,500 nearby. It's a big rounding. That's a rounding number as well. It's kind of a resistance zone from where the previous breakout happened. So there could have some resistance up there, 47,500, and then 48,000 big rounding number, which is very close by. Swing high at 48 to 160 also, previous swing high. So that's the major hurdles. And after that, all-time high. So now it is extended from 500 points away from all-time high to 1,600 points away from all-time high. So the first support would obviously be the 46,924, the 20 exponential moving average support from where it bounced today, and then the 46,566 50 exponential moving average could act as support, and then the 100 exponential moving average of 46,063 and rounding number 46,000, and the retracement of Fibonacci 38 also, or coming at 46,000. So 46,000 would be very crucial support. Breach of that, you'll have trouble. You will have trouble till at least 45,000, where the 200 exponential moving average is at the Banknifty. Right? We have a channel here. Looks like it is heading towards the bottom of the channel until 45,800. So it's crucial that 46,000 would provide support and create another higher low and then bounce up from here. That possibility is there. It may retrace a little more, but there are supports. But Banknifty, the higher low, higher high patterns will get breached after the 21,800 is breached. So that is very close by actually. That is breached, then the pattern of the price action of higher high, higher low change to lower low, lower high pattern in the daily time frame. So, so Nifty is in more trouble than Banknifty looks like. Let's just quickly wrap it up. So sharply falling 338 points single day Nifty, when the Banknifty lost only 300 points, 0.64%. Otherwise, buy and range bearish candles on both. Rally is 34% of the 4.5% cut retracement earlier on Nifty, with a 26% rally and 8.5% retracement down on Banknifty. Banknifty has lost the rounding number 47k, and Nifty has lost the rounding number 22. But Banknifty retains the 20 exponential moving average, but Nifty lost it. Support resistance levels, immediate ones at 21,630 and 21,817. First the 21,817 and then 21,630. The reasons we already see. Resistance 22,500, before that 22,000, which is very close by. Banknifty similarly, 46,000 is the most crucial. Before that 46,500 also supports. Resistance 47,500 nearby would have resistance at 40,000. So we have seen that already. I'm not repeating this. Well, if you just categorize all of the things in favor of those in the bears, you can see that Banknifty is showing better strength. It is not lost in the exponential moving average. It is inside bar inside previous candle. It is not close below the previous candle's close and all that. So that will give some hope, little hope. But US indices are bullish. That's giving more hope. Today it has bounced once again, showing green. It's an all-time high. It's a mother market. So the entire rally that we're having is a follow-up of the US markets, US indices and US market rally probably. So global rally, as I say. And the dollar is kind of slightly red flattish, 2.89. Look, has gained slightly, but still very close by the 83 week, 80.79. But yeah, so some global cues are in favor, that we would say, right? Rather than local cues. Uncertainty of the election declaration can bring in a bounce up probably. Yeah, so global cues and are in favor, you can say. Banknifty is showing better strength against Nifty. These are the only things I could find as in favor of bulls, but everything else seems to be in favor of the bears as of now, right? Because of the big sell-off that's happened today and 2 days back. So it's a wide range bearish candles, definitely bearish. 5% fall in the metal and reality indices today, and both the metal and reality sectors fall into the bearish momentum. So probably because of the mid cap and the small cap correction might have contributed to that. The sectoral indices slipped sideways, except the other. If you take the metal and the reality that has fallen in the bear zones, others have fallen sideways from them. So none of them are bullish with respect to the sectoral indices. Now, if you take the heavyweight major stocks, all of them are slipping sideways. None of them, except the ICICI Bank, none of them are there in the bull zones lead. So we have the trouble in sectoral indices as well as heavyweight stocks that contribute maximum to the index. The VIX is spiked up. Previously, the market has fallen, so VIX is spiked up. So it is once again getting closer to the 15. After having fallen to the 13.5 kind of levels earlier 2 days back. So portion needs to be there. It's outside of the low volatility if it is above the 15. Right, once it heads towards the 20, as the election approaches, you have to be extremely cautious. The market will be huge. Well, the bands now is no longer expansion from the upside. It's turned to contraction yesterday itself. Now today it confirms that once again, and its potential sideways what it indicates. It can be volatile within the Bollinger Bands as long as it's sideways with a bearish bias. Because bearish bias on the Nifty because 20 moving average median has also breached today. So bullish bias is the Banknifty consolidation. So consolidation is what the Bollinger Bands say. Momentum, if you look at the RSI in the short term, daily charts, you can see it has fallen sideways both. 2 days back, both of the indices managed to climb back to the bull zones, and then suddenly now we have a sideways falling scenario. So momentum lost, trend is lost, Bollinger Bands are sideways with bearish bias, VIX is spiking up. Across the indices, you don't have any leaders which leading the market up. Across the heavyweight stocks, we don't have XL1 stock, we don't have any other stocks. It's in the bull zones of RSI above 60. It's trouble there. Again, trouble coming. Fyers sold nearly 5,595 in the cash market today, although the mutual fund money from the domestic institutions found 10,000 crores. Even then the market was falling. Is buying happened with the Fyers also. Fyers continued to sell. They were buying nearly 50,000 in the last 4-5 days, but then half of that is given up in a single day of selling. Oil is spiking up, which is again a buy. Oil bought a company like us that's 79, very close, heading towards the 85 kind of zones to the top of the trend line channel. So, and gold is at all-time high, and it remains there at the very top. Anytime it could make another all-time high and spike up. So, people could be investing away from the stock market and putting money in gold. That's something for the bears, in favor of the bears, basically. Right. So that's something to keep in mind. So if you just wrap it up, you can see market has lost momentum of the trend and because of this sharp fall and the continuation of the sell-off that is happening in the last couple of days back, last 3 days or 4 days. This is what is happening. So the trend that it had gained the previous week is gone. Now the necklines of the W, flag pattern breakouts and all that we are talking about is negated. Once again, it had done that last week's beginning, but immediately it negated that, but now it's on the other side. The breakout patterns are not working, but the higher low patterns still valid on both indices, Banknifty especially. So as long as that is there, and Banknifty also maintains the expression moving average, but it's 1,650 points away now from the all-time high. Whoa. So Banknifty once again has moved away after having shown some strength previous week. So momentum is back to sideways, trend is crossed for the negative zones. Well, Nifty has lost trend expression moving average once again. The patterns are negated once again. The risk of the price action turning into negative lower high on Nifty. All this makes us think that are we going for a larger retracement or as a correction this time? Instead of the 4.5 mere 4.5% out of a 34% rally that Nifty had done earlier. Are we going to do more of that? No? Or are we going to just consolidate for some period of time before it catches up, trying to move further again? Yeah, so the market has corrected sharply. So, but that has also happened in the mid cap and the small cap because of the weak directive and some news flow following that. Right, so That could bring in more money to the large cap. So large cap stocks have moved. It is moving, LTC is moving, and all that. You can see that. But it's not moving maybe the mid cap and small caps henceforth. So that is also one way positive. The breach of 21,800 and 45,661 could change the price action into negative. And afterwards, until 21,137 on Nifty and 44,429 on the Banknifty, both those previous swing lows, immediate previous swing lows. If on the weekly you can see that. So until this is, if that is breached, then it turns into worse. It confirms the bearishness if it is fall below that. Hopefully it doesn't, and it will find enough supports much more for that, and then consolidate until then. So this 22,000 maintaining and the 47,000 maintaining the Banknifty is very crucial. If that cannot be maintained, it will lead to consolidation downfalls until those two levels that we spoke about earlier, the previous swing lows. Until then it will be consolidating, but after that it will turn confirm bearishness. Right? That's what you keep a watch on. Right? So eventually the market is going to rise up as long as we have a bull rally going on, and as long as the election outcome pre-rally and all these things are there. So a big major correction is not expected before a major event of election that's going to come in a positive way, hopefully. Yeah. So every tips like this that happens is in which no opportunities for you to put in money in good quality stock in the SIP mode, small chunks. Trade in the direction is gone. You don't have a momentum of the trend right now. Neither you have it from the downside momentum, nor you have an upside momentum. So it's midway, sideways. So playing the non-directional makes more sense, but non-directional option selling does not alone helps much with the 30% spread difference between the IV and the realized volatility. But IV percentile is very high, even at 80% or something. So still in favor of options. Option sellers still can find a way to make money, but option buying you have to wait until confirmation of the bearishness comes in. It's sideways market right now. It's consolidating. So tomorrow you have weekly expiry in the open interest levels of 41 at 21,700. Where the highest put writing is seen, and 22,500 where the highest call writing is seen. So 22,500 is going to be very far away. So it's only 200 points. It's bearish PZR of 0.57. So it may be most likely heading downside given the futures short build up also that has happened today. Right. So that's a range where you'll have to place a bet for tomorrow. Right. So that's all I have. So let's say if we had a sharp fall, so immediate further continuation of that may not come in immediate, but it would come in. Such sharp falls indicate heavy bearishness somewhere. So immediate upside move or immediate downside move may not come in tomorrow, but in the coming days it may further continue to trace what looks like. Right? But otherwise it's consolidating. That is what exactly what is happening until those levels that we discussed. So keep that in mind. Right, keep these charts and levels in your mind, and then let's say if you manage your risk, that's all you can do. Right, manage your risk, always manage your risk, and protect your capital, and have hedges, stop losses tight, and then have a view on the market before you enter the trade, based on the technical analysis, based on support and resistance levels, the probabilities of market facing the heat or facing the support exist. That's all. The market may surprise you, just like how it did today. Market may take away, screw up everything, and then have like swans can screw up all the technical analysis, but still by having a position sizing properly done and then cutting at big tight stop losses and hedging your positions properly can still give you another chance, even if your views goes wrong and market surprises you. Okay, that's all. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.